Earnings season in full swing with three Dow components reporting ahead of the open: 3M, United Technologies, and Verizon. Joining us right now, Wells Fargo Senior Global Equity Strategist Scott Wren. Your take on earnings season so far, Scott? I know that we've gotten some of the earnings out already.
Well, you know, Dagan, we're in pretty early. I think there's still one or two sectors that haven't had a company report. But overall, they've certainly been good. They're coming in better than what we've expected. And I think the attention still is going to continue to be on those sectors that benefit from a continuation of the expansion. I mean, I think that's where the attention's going to be. I think that's where the best growth rates are going to be. So those are the sectors that we're focused on.
Hey, Scott, Mike Block. So, looking at large caps in the U.S., what sectors are those?
Well, for us, Mike, we like industrials. Obviously, these fears over this trade war have affected it, but certainly the earnings have been good. So we like industrials, consumer discretionary. We like financials, which obviously the flatness of the curve hasn't helped. We also like healthcare. But, saying that, really, if you look from the recent low, which was on June the 27th, and you look June the 27th through yesterday, basically, these cyclical sectors are leading the charge, and the ones that were underweight, which are the defensives, largely staples, utilities, we're also underweight energy, those are underperformers. So I think that's the way you want to be leaning as we look forward here over the next 6 to 9 months.
Well, Scott, are you going through each and every one of these earnings reports, really trying to figure out what the impact of the tariffs that we've seen so far that have been slapped on steel and aluminum and some Chinese imports and then some exporters to China?
Well, Dagan, we're talking with our individual company analysts all the time, and certainly that's one of the things. And clearly, industrials are going to be the one that's mostly affected. But, for us, what we've done is we've decided we're going to take a stand here. This has been the case for months now that, we consider an all-out trade war a low probability, maybe a 20% probability, something like that. It's certainly not zero. But I think that, if you can win the game 4 out of every 5 times you play, you want to be playing that game. So for us, we're more focused on what's the Fed going to do, what's global growth going to do, are we going to see a wage surge that cuts into corporate profit margins? Those are the things that I think are going to drive the stock market over the next 12 months. Trade war, we're going to hear some noise. It's probably going to present opportunities to buy stocks, but I just don't think we're going to have an all-out trade war.
Scott, hi, this is Jason Chaffetz. What don't you like? I heard a lot of optimism in a lot of different sectors, but what do you not like? And why is the housing sector lagging behind, according to this front page story in the Wall Street Journal?
Yeah, Jason, really, as I mentioned, really, we don't want our clients hiding. We don't want them being defensive. So, utilities, staples, those don't look very, very good to us. Energy, overall, we're underweight. We're unfavorable on commodities. So we thought oil was pretty toppy at 75. Still think it's a little toppy here, and it'll be lower at the end of the year. As far as the housing market goes, and, you're younger than I am, but, it makes me laugh when I hear a lot of people say, gee, these 30-year mortgage rates have popped up. I mean, the first time I bought a house in 1986, I felt really good about the 12 3/4 30-year rate that I had. So, I think the housing market, the labor market is good. People's incomes are rising slowly. I think we've seen a little bit of stumble here just recently in the housing market, but I don't think it's going to fall apart by any means. And, we still just have an inventory problem out there, and now these prices have run up, and so it's a lack of inventory and a little bit higher prices, less affordability, but no way, shape, or form do we think the housing market's going to fall apart here.
Somebody tweeted, as President Trump was talking about the Federal Reserve last week in an interview, and he mentioned it on Twitter as well. Someone tweeted me and said, why can't the Fed just get out of the way and let the market run the way it did in the 80s? And I said, well, the market was able to run the way that it did in part because of the pro-growth policies out of the Reagan administration, but it was 2 back-to-back recessions and a Fed that was jacking interest rates. I mean, we had like double-digit interest rates, as you pointed out, Scott. So again, if the Federal Reserve is hiking interest rates, two more expected maybe the rest of the year, that's just a sign that the economy is doing well, and you want to prevent it from overheating.
That's right. You know, it's not Armageddon time anymore, and we need to get these rates up to what would be a normal type of rate, or at least a more normal type of rate. And you know, certainly in the early 80s, we had the double recession. I mean, Paul Volcker was trying to do something different. That was, you know, step in front of the inflation freight train. And we're not there now. And so I think Jay Powell is very much aware that he needs to be careful here. And while the Fed may desire that rates are higher or more normal, getting from here to there is a little more difficult. So, you know, I think these rates, our call is that we see one more rate hike this year, and then maybe you see 2 or 3 next year. So I don't think the Fed's going to make a mistake this year. But if you look back at most cycles, at some point the Fed raises rates too much, they leave them too high for too long, and you roll over into a recession. So I think the chance of a recession over the next, let's call it 12 months, is pretty low. But the Fed does need to be careful here.
Just real quick, though, the more pressure out of the White House that's put on the Federal Reserve, do you run the risk of the Fed overreacting to exert its independence?
Well, I certainly don't think the White House should put pressure on the Fed. They need to remain independent. I don't think the Fed is going to react to that at all. I mean, they are not going to crack, so to speak, under this pressure. And really, to be honest with you, I really doubt the president is really going to pressure them very much.
And you heard that from Secretary Mnuchin. He said the president does believe in an independent Fed. So I just wanted to raise that with you. Scott Wren, thank you, sir. You covered a lot of ground.
Have a good day, guys.
Good
all
to
right,
see you.
thank you.